The nonprofit MBA purpose is to provide new business insights and fresh creative ideas for executive directors and their teams that will help them improve their organization. Here is your host, Stephen Halasnik.
Welcome, everyone. My name is Stephen Halasnik. I will be your host, as I usually am, for the Nonprofit MBA podcast. And for those of you who don't know me, I'm co-founder of Financing Solutions. And over the last 12 years, Financing Solutions has been the leading provider of lines of credit for small nonprofits in the United States. I am a firm believer in having a line of credit. The product has been extremely popular with nonprofits for many, many different reasons. If you're interested in learning more or potentially just seeing what you qualify for, please visit our website at nonprofitmbapodcast.com. We also have a sponsor. It's Arrays Fast Fund Online, which is accounting software that is specifically used for small to medium-sized nonprofits. You know, I'm a firm believer in having software that's specifically built for an industry. Instead of making something like QuickBooks work for your nonprofit, it's good to have software like Arrays. It's spelled Araize. It's better to have something like that than it is to use something that's not really made for nonprofits. And one of the nonprofit, I'm a board member at this nonprofit. There are two of them, and we use Arrays as well. So if you're interested in learning more, go to arrays.com. It's ARAIZE.com, or call Joe at 866-840-7449 and tell him Steven sent you. Today, I'm very excited to be speaking with Jason Kruger from Signature Analytics. On today's episode, we had the pleasure of speaking with Jason, and he's the president and founder of Signature Analytics. Jason is shaking up the way business owners run their businesses and nonprofits by highlighting the gaps in data and reporting that many business owners and executive directors face when they're sharing, and also sharing insights on how to improve profitability, increase productivity, and how to run your organization better. Jason has 20 plus years of experience in the accounting and business advisory field, working with mid-market companies and nonprofits. And join me in welcoming Jason to today's podcast. Jason, welcome to today's Nonprofit MBA podcast.
Great. Thanks, Stephen. Good to be here.
So we're going to, kind of tackle this topic of what nonprofits need to know to breeze through an annual audit. To some of us, it might be a dry subject, but the issue that we see is when you look at Google and how many times people actually type this in for a nonprofit, it's typed in between 400 and 600 times a month. Yep. So it is a topic that a lot of people are want information on. And that might be the reason why many of you are listening to this podcast as well. So, Jason, why don't you start off by telling us a little bit about your experience in dealing with an annual audit for a nonprofit?
Yeah, sure. So, as you mentioned, it can be dry, but it can also be a big source of pain and suffering for nonprofits, the organizations, and the challenges that come with not filing on time can be considerable. And just a quick background. So I actually started my career in financial statement audit, spent most of that with Deloitte & Touche, which is one of the larger public accounting firms. And I actually was involved with a number of audits, financial statement audits of nonprofit organizations. So taking that experience and bringing that to how we support our nonprofit clients as it relates to preparing them for an audit in advance. I think it sounds obvious, but being prepared is the key to success. And then also in supporting them in just their ongoing everyday accounting needs. I think a lot of nonprofit organizations, especially as they're smaller and continuing to grow, they have limited funds, and they have to use those funds wisely. And what's most important for nonprofits is investing those funds in the programs that achieve the mission that they're looking to accomplish. So it's definitely, the audit process is a challenge for a lot of companies because they don't have the sophistication on their existing team to support that process. And that's where we come in to help a lot of our clients in that area.
Why, when it comes to a nonprofit, why would an annual audit happen?
Yeah. So
Step back, show.
Sure. From a nonprofit perspective, they're actually required by different states may have different requirements, but a standard requirement is revenues or contributions over, let's say, $2 million would trigger a compliance requirement by the authorities to have an audit performed. So that would be, just want to make sure we're clear that this is not an IRS audit. It's not a tax related audit. It's an audit of the financial health and the financial statements of the entity. And the reason that this is required is because the government wants to make sure that people that are investing or giving their funds or donations to these nonprofits, that they have some level of confidence that they're being operated effectively, and that also that the donations that they're giving are actually going and being contributed for the good of the mission that the nonprofits have.
And so this is when you're over $2 million, correct?
Yeah, over $2 million. So if you're under two, that seems to be a triggering point, is over $2 million. Under two, I don't believe is required in most cases, but they still are required to file from a tax reporting perspective and compliance perspective, nonprofits are required to file an annual 990 return, and it's more of an informational return because they don't pay taxes, but that also goes on file as well. And then once they hit that certain revenue threshold, they're required to have a financial audit done by a third party, an outside third party CPA firm. So an independent firm.
So an independent firm from your existing CPA firm?
It can be, yeah. So again, if you're a nonprofit, you're not paying taxes, but you do have to file the 990 return, which is an informational tax return. If that CPA also performs audit, if they also perform audit services, then that firm can be used. If they don't, that usually what I would recommend is they can use that individual to recommend a firm that would be able to provide them with audited financial statements.
Okay. Now, in that audit, what are some of the things that the auditor will look closely at?
Yeah, so so there's standard audit practices that are performed, and procedures that are performed on every audit of every engagement from a nonprofit to a for-profit business. But as it relates to a nonprofit, they're also going to be doing some extra testing and understanding of contributions, donors, donor restrictions. If the nonprofit organization has grants or funding from grants, those may trigger additional compliance requirements that need to be looked at as well. But what it really comes down to simplify the strength and the ease of an audit process really comes down to the accuracy of the information that they receive. And so where a lot of nonprofits have challenges is that they have an individual that's doing the day-to-day accounting. That individual may be a bookkeeper, maybe maybe has a controller title, but they're usually managing all of the accounting. So they're doing the day-to-day. They are paying the bills. They are reaching out to donors as it relates to what they're calling receivables, and making sure that they're collecting all of the payments that need to be required. They should be reconciling all of the accounts, the bank accounts, and closing the books on a monthly basis. What ends up becoming a challenge for these individuals is if they've never been through an audit before, if they don't have a good process to close the books, if they don't have a good process to produce good supporting schedules for balances within their financial statements, then it's going to be very difficult to get through the audit process. And what I mean by that is a lot of organizations, or companies for that matter, might wait until the audit process to start preparing those schedules. The best practice is really to be doing that on a monthly basis. So if you can really develop a strong internal financial accounting department with the right oversight and the right processes, and you implement a good, strong monthly close process with supporting schedules for your numbers, that does a couple things. It gives you confidence that you have timely, accurate, relevant information that you can make decisions off of. And it also, by following that process, will allow you, you're 80% of the way done with the audit anyway by performing those procedures on a monthly basis. So when you do get to the audit process, you have that information, it's being done, it's being reconciled on an ongoing basis, and you can provide that information to the auditor. That simplifies the process considerably, is having consistency and good organization and supporting schedules on an ongoing basis.
So there's two areas that I want to touch upon. Like most of my podcasts, I'm curious. We look at financials all the time for nonprofits, so it's very common. And by the way, when we see audited financials, that means a lot more to us than
Right.
an internal income statement. It doesn't have to be that way. It just gives us a lot of credibility. But the two areas how does the auditor know what's going on? Let's say that you have donations that are coming in and there is restrictions as to restricted donation versus unrestricted donation.
Yep.
So, the unrestricted is used for operations. How do they do a test to see how that was actually distributed?
Yeah, so that's a good question. In some cases, there's what they call permanently restricted donations. And in most cases, that might be a larger dollar amount, and it may be some sort of a fund that may be set up that produces interest or produces some level of earnings that the organization can use for special purposes. In other cases, they'll call it temporary restricted contributions, and that may be for special purpose. And so a lot of times it's for the build out, or maybe it's for a capital campaign, or maybe it's for a certain aspect of an organization where they're really focusing on building out a new program to achieve the mission that they have as an organization. And so they will request, or donors will come in and say, hey, I want to give these funds, but I want it to go specifically for this particular program or for this capital campaign. And so that then has to be accounted for separately. And those funds, then when those funds are incurred, they're then able to, when those expenses are incurred, they're able to assign those contributions to those expenses to ensure that they are being used the right way. And so the record keeping and the accounting for that is critical, because if you lose track of that, you have that's a serious issue, because you ultimately would lose faith in your donors and your donor base that you can effectively use their funds the way that they wanted you to use them.
So the your bookkeeper will have a category called restricted donations, and then they'll have another category called unrestricted donations.
Right.
Is that okay?
Yeah, exactly. And so if a program or the expenses have not been incurred on whatever they provided their donations for, then those funds are still shown as restricted. If those expenses have been incurred and they can show that those funds that were provided were used in the in the expenses that were incurred, those then restrictions then get released and are no longer restricted.
What about, let's just say you have a nonprofit where the executive director is running a lot of personal expenses through the nonprofit.
Yep.
Does the auditor say anything about that? Or, is their job just to kind of look at the numbers and say if there's fraud or not, I guess?
Yeah. Yeah, that actually would be a significant red flag. The auditors would definitely point that out. That would be considered a deficiency in the controls of the organization, in the financial controls of the organization, because nonprofits, they should not be running personal expenditures through a nonprofit unless it relates to the mission of the organization. So if it's travel costs and they were legitimate, business purposes associated with the mission of the organization, and you're reimbursing for your travel costs, mileage or gas, or if they were costs for meals and entertainment that were directly associated with the mission of the organization, then those might be fine. If they're clearly not related to the organization and are clearly personal related expenses, those, that's not obviously a best practice, and that would be a significant red flag during an audit process. At a minimum, the individual, those items, those personal items, if they are incurred on behalf of the company, need to be accounted for, and ultimately, it's basically is what it equates to a receivable due back from that individual to pay those funds back, because
Gotcha.
those are, obviously those cannot be included as far as expenses of the organization.
No, I don't know if it applies to nonprofits too, but there's something called reviewed financials and
Yep.
audited financials. And does that apply to a nonprofit as well?
That may be applied to a nonprofit if they're not required to have audited financials. But let's say someone like yourself is providing them with a line of credit and you want more comfort on the accuracy of their financials, you may require them to have reviewed financials. Reviewed financials.
We don't,
Okay.
But many banks would. Yes.
Correct. Yeah. And so reviewed financials would be it's a similar process, but it doesn't provide the same level of assurance to a third party. So the steps incurred are not as intense as an audit. If you have to go through the process and you have the choice and you're the business, if you want audited or reviewed, typically I would choose reviewed financials. However, a third party or the board, in a lot of cases, the board of directors might want audited financials because they will want that additional comfort that in the accuracy of those financial statements. So
Yeah, and keep in mind that certain donors, that's that's a big, that would be an important green flag. I don't want to say red
right,
flag,
yeah,
a positive,
exactly,
right? If someone says, "Here, I have audited financials," then as a
yep,
business person who maybe was gonna make a donation, I'd be like, a large donation. I'd be like, okay, this company, excuse me, this organization is legit.
right, yeah, it's best practice. I mean, companies or organizations that have an audit, they can show the donors. They include the audited financials on their website. They tout that, hey, we've been audited by a reputable firm. Everything that we say we've done, we've actually done. They can show the percentage of dollars that were donated that went directly to programs versus other G&A expenses. And they can. That's how they gain that reputation as being a solid nonprofit organization that is worthy of the funds that they're receiving.
Now, in general, I mean, how can you like if you haven't been through an audit before or a reviewed financial process, you're like, what is this going to cost me,
Yep.
right? How, I'm sure correct me if I'm wrong. I would think it's very much based on the size of the organization because the
Yeah.
bigger the size, the more complex it is. So, is there any golden rule that our listeners would know about the cost for a reviewed financial versus a audited financial? And you know,
Yeah, I don't know if there's a golden rule. I think that the cost of audited financials as a whole and the cost has increased over the years, especially. I think the starting point for an audit by a reputable firm, and I know there's a lot of firms out there that might do provide audited financials that may or may not be as reputable. And I would really look into the firm and make sure that you have confidence that this is a firm that you can put your reputation on the line for, and that when you're talking to donors, that a firm that really um, gives the outside third parties the confidence as well. So I guess what I'm getting at is the cheapest alternative isn't always the best solution. But at a minimum, even on the small side, it's going to be $10,000 to $20,000 for
yep.
full audited financials, and obviously it will go up from there. So much larger organizations. I mean, the United Way's audit is probably in the hundreds of thousands of dollars, right? But a sweet spot once the organization has gotten to 10 million plus in revenues, you're probably looking at probably close to $30,000 to $50,000.
Yeah.
So it's not a cheap endeavor, but there is a lot of value in that report, especially if it's done by a reputable firm that you can leverage to go out to the market with, and to third parties, to donors, et cetera.
Now, a reviewed financial for a nonprofit that's under 10 million, $5,000 to $7,000. Would you say?
Yeah, I mean, if it's smaller, I mean, if it's probably under 5 million, I would say, probably in the 10,000, maybe $10,000 range. Once you get up to 10 million, then, there's, again, you're getting a little bit more expensive. It really depends, but it'd be hard pressed to find someone that would do a review, perform reviewed financials for under $10,000 in for a $10 million nonprofit.
Now, you guys do reviewed and audited financial reviews, correct, for nonprofits? Is that accurate?
No, we actually support our clients' internal accounting environment. So a lot of our clients, so it's really kind of more of like an outsourced accounting and CFO advisory support. So most of our clients will have the individual that's doing the day-to-day transactional work. They may not have the sophistication to really produce good financial information that the business owners or the executive team or the executive director can use to make the right decisions on. And so we'll help to really establish the strong processes and procedures to ensure the right reporting is in place for those for the executive team and for third parties like the board of directors and so on. What that then also leads to is supporting the audit process. And so, again, it's if we can develop a process where we're closing the books every month, we have reconciled each of the accounts on the balance sheet and the income statement are reconciled effectively. Once we get to the audit process, we can then provide those reconciliations to the auditors, and it really streamlines that process significantly.
I would imagine that you see your share of, in fact, I would think the majority of the people who are coming to you for the first time, maybe because they're getting an audit or getting reviewed,
Yep.
that their books are a mess. Is that pretty common?
Yes, that's accurate. We get a lot of our clients. We get a lot of clients because of exactly what you just described. They're trying to get through an audit. It's been a challenge. The auditors are having challenges because they're getting information they can't reconcile or can't tie out. And so we get a number of referrals. We bring in a number of clients in that area. So what we do in those situations is, they're already in the middle of it. So what can we do to really help pull the information together in the format that the auditors are looking for to keep this moving forward and to ensure success? What that ends up turning into in a lot of cases is the realization that they don't have the right processes to produce good financials on an ongoing basis. And what these organizations, as they continue to grow and realize, is that they deserve better than what they have, but they can't necessarily afford the top talent to bring in, and they can't afford an expensive CFO. They can't afford, and it doesn't make sense for an expensive controller to come in, and that's where we come in, is to really provide and augment and support their existing team, provide that financial leadership and oversight, so that they're able to produce good financials, good reporting on a consistent basis. Ultimately then leads to a very simplified audit process moving forward as well.
So I'm going to ask you this question, and first I just want you to tell me, without getting to the details on it, we'll come back to the details. The top three things you say in when you go into a client that is kind of a mess.
Yep.
I would imagine one of them is nothing's reconciled,
Right.
right? So
Yep.
that's number one, and then we're going to dive into all this in a second. What's 2 and 3?
Yeah. So 2 would be that they don't have the sufficient talent on their team, right? So to even if they knew what they had to do, they don't have the expertise or the experience to do it effectively. So talent and on the team, especially with nonprofits, is a challenge.
And so therefore, things are never categorized correctly, or they're not. They may not even be using account. Are they? Is it so bad that they're not even using accounting software?
Rarely, in
Okay,
a lot of cases, they're at least using something like a QuickBooks.
right.
But a lot of times it might be somebody who doesn't really have a background in accounting, but they're more of a bookkeeper. So they're entering the information in QuickBooks, but it's producing information that might be cash basis versus accrual basis. And what ends up happening is there's not good. Ultimately, what management needs, what the program directors need, is they need to understand what's my budget and how am I tracking against my budget, and what's the overall, how do we deem, what's the overall performance of the organization. So how do we define success? And they need that information, and that comes through the right reporting. So the third area is lack of reconciliations, but truly it's lack of consistent and quality reporting for management and program directors to be able to effectively run the organization to its highest level of capacity.
And the third thing that you would see most often.
Yeah, I mean, I just lack of reporting or lack of timely reporting, and that's where the pain is with management, right? So they're saying, hey, we're trying to work with Steven on getting a line of credit, and I haven't got my books closed since January. And Steven's asking me for financials so he can provide us with a line of credit. And we really want to work with him, but I don't have anything to give him. Right. And so, and the January numbers may or may not be accurate. And so that's the pain, is at the executive level. It trickles down to the executive level of, am I getting good information? Is it timely, and can I trust it? And that's a significant pain that we see.
At what point in revenue do you really think it makes sense to bring you on board as a part-time CFO? I mean, is it like $1 million in yearly revenue when you start saying, okay, this is getting a little more sophisticated? You should probably bring us in at this point.
Yeah, I would say that it's not as much a lot of it is the mindset and the growth opportunities that exist. So if you're $1 million, but you're going to be doing 5 to 10 million next year, ASAP, right? If you are doing $500,000 and next year you're hoping to do 600, I think it's definitely worth a conversation. And there's some things that we can do and to support and to drive, to provide value to help those, individuals and the executive directors and management to take their organization to the next level. But again, what we're offering is that financial leadership. We can also do the day-to-day accounting. So for those smaller organizations at $1 million, they don't probably need someone full-time doing accounting. So if they need somebody, that's where we can layer in and do the lower level work because it's part-time. We can be flexible, we can be scalable, and so on.
Yeah, my experience in this area too is that if you get help earlier, you typically will save money in the long run,
Right.
because if someone has to be brought in later, it just costs a lot more money in hourly work because you guys have a lot more
Right.
to try to uncover. So, it's probably a good idea to have. I had a part-time CFO at one company, where once a quarter he just overlooked everything that my bookkeeper was doing,
Yep.
and and got us into best practices. So,
Yeah. Yeah, it's critical. I mean, having that financial leadership and oversight from the beginning is critical. And I was listening to one of your earlier podcasts, probably a few weeks ago or a month ago, and you were mentioning, something similar, which is, um, getting in early, and making sure that if you can get the good reporting and a foundation set from the beginning, then the decisions that you're making now, you understand the impact of the decisions that you're making. You understand how that impacts the financial side of your business, and it also gives that credibility to a third party. It gives credibility to the board of directors that, hey, these individuals, they are setting themselves up for success in the long term, and they're setting themselves up for long-term growth. And I think with nonprofits, so much of it is about credibility in the market to third parties like a board of directors, to someone like yourself who's providing some level of financial assistance to them, to donors in the market. And if you go in, most of those individuals, the first thing they're going to say is, "Let me see your financials." And if you give them just something that you just printed out of QuickBooks and it doesn't necessarily make sense and it's not organized effectively, you're going to lose that credibility and it's going to stunt the opportunity for growth in the organization.
Yeah, and I would say the reverse is true too, which is, if you give them really good financials, it will really impress who
Right.
you're trying to impress. And listen, let's face it, that could be a grant. Someone's looking to give a grant. It could be a
Right.
donation. It could even be, someone who may be an employee who wants to join your organization at executive level, or a board member.
Right.
And there's a certain amount of pride that if you have a good board of directors, there's a certain amount of pride that people take in seeing good financials.
Absolutely.
So,
I mean, yeah, anytime, I mean, for, internal purposes and it's just yourself, doesn't have to look fancy, but there is, that credibility side, especially for nonprofits, is so critical, to help them to achieve the goals they have. And if you can be buttoned up in accounting and the other areas of your business, that will just open up the doors for a lot more opportunities.
Yep. Well, all good stuff. I mean, I think we really gave some good information. I'd like to thank so very much Jason Kruger from Signature Analytics for coming on to today's podcast. And if you like today's podcast, please feel free to share it with a friend, and also subscribe on your favorite podcasting app. And if you like today's podcast, also, could you give us a 5-star review? It really helps us get the word out. And of course, if you're looking for a line of credit for your nonprofit, you can call us at 862-207-4118 or visit our website at nonprofitmbapodcast.com. Jason, if anyone wants to get in touch with you, how would they go about doing that?
Yeah, so our website's real easy, signatureanalytics.com. Anyone is free to email me directly, the letter J, Kruger, Kruger, at signatureanalytics.com. And call me as well, 858-228-5643. Be happy to answer any questions, thoughts. At a minimum, provide direction on, or make an introduction if I can, to help whoever might reach out.
Sounds good. All right. Thanks for coming on.
Yeah. Thanks so much, Stephen.
So I want to thank all our listeners, not just for listening. I do thank you for that, but I just want to remind everybody that you're out there every single day making the world a better place, and I thank you for that. Jason, thanks you for that as well. I just want to remind you that you're no good to anybody, your family, your employees, your cause, if you don't take care of yourself first. So please make sure that you are doing all the right things. This is a marathon, not a sprint. And you're no good to anybody if you're burnt out, and if you're not taking good care of yourself mentally and physically. So make sure you prioritize yourself every day. And we all know what that means. It means exercising, or making sure you eat right. Make sure you take time to be with family and friends. So don't forget that. We need you. I know Jason and I are trying to do our part in a little way to make the world a better place in our own way, but you guys are out there every single day, and I thank you for that. Other than that, I just want to wish everybody a great day. Try to get out there, smell the roses. It's summertime almost, and it's beautiful weather for most of the country, and try to get out there and enjoy it. You certainly deserve it. Have a great day, everybody. Welcome again to the Nonprofit MBA podcast.